One more quick tip from FreshBooks. So there's actually an all new FreshBooks that's coming out specifically for small business owners and freelancers. So I just want everybody to make sure that they know, because the quick tip today is all about having that stuff backed up. So please, I want you to think about this for a second. If you're using another type of software and it's on your computer, I've had so many issues with lost computers, corrupt programs, all sorts of craziness. So now, thank goodness, with things in the cloud like FreshBooks, we don't have to worry about that. So if you're using an old, outdated anything, either back it up. If it's a spreadsheet or anything, back it up, back it up, back it up. Otherwise, go check out the new FreshBooks and go to freshbooks.com/EM and put Eventual Millionaire in the Where'd You Hear About Us, so you can find out more of exactly how you can really get your finances under control. So go back up right now or get FreshBooks. Have a great day. Enjoy the interview. Welcome to Eventual Millionaire. I'm Jamie Masters, and today on the show we have Matt Bodnar. He's actually an accidental podcast, but also an investor and real estate partner in Fresh Groups, and also a partner at Fresh Hospitalities. Thanks so much for coming on the show today.
Thanks for having me, Jamie. I'm super excited to be here.
So I love getting introductions to amazing people. He's like, this guy is amazing. He called you a kid, though, I'm pretty sure, too, because you look so young, but you're amazing. Can you start going through sort of your history and how you've done what you've done so far? Because I think people will be ridiculously impressed.
Yeah, absolutely. So, I definitely have a young face, by the way. But I'm pretty sure I'm actually older than the person who introduced us to each other.
Seriously? Good.
Yeah. So that's really funny that he called me a kid. But anyway, so my background, I'll give you sort of the short version of the story. I sort of call myself an investor and an accidental podcaster. The whole podcast thing, we could get into that later, but I'll tell you about my investing world because I think that at least immediately would be more relevant. So I'm a partner at a company called Fresh Hospitality, and Fresh is an investment vehicle that invests kind of across the food service and the food spectrum. So we invest in everything from farms to production facilities. Really, the two biggest pieces of our portfolio are restaurant operations and restaurant investments and commercial real estate development. And then we also have a number of sort of smaller service companies in and around that ecosystem that support the other piece of our operations, like technology, accounting, marketing, et cetera. And so I originally out of undergrad, I majored in political science, which had nothing to do with my job. And then I went to New York and I worked at Goldman Sachs for a couple of years. After that, or kind of during that, my brother and my dad were starting. They had been in the restaurant business, and they were kind of starting up this company called Fresh. So I'm not a founding partner of Fresh, but I am a founding partner of a couple other investment vehicles, which we can get into. But they were starting this business up, and I was kind of at my desk, like crunching away 16-hour days, at spreadsheet hell. And eventually, I would always come home for Christmas break or whatever else, and they were doing all this awesome stuff. And eventually kind of the opportunity cost of staying the Wall Street course versus, doing something more entrepreneurial, kind of getting involved in early stage businesses, et cetera, was too great to pass up. And so I moved back to my hometown of Nashville, Tennessee. And that was about 5 years ago. And then to give you some kind of color, Fresh, again, I said the two biggest pieces of our portfolio are restaurants and real estate. Within the restaurant vertical, when I got involved, we had about 43 units across about 4 different concepts. Today, we have about 15 different concepts comprising about 155 units. And we do across the different businesses that were in just in the restaurant vertical, about $230 million in annual revenue. Within the real estate portfolio, I co-founded our real estate investment company. It's called the Fresh Capital Group. And to date, we have a portfolio of about $325 million of assets. We also have that are operational. We also have a development pipeline of about $90 million of projects that are in some form of construction or whatever else it might be.
Okay, I have so many questions, so hold
so
on
that's
a second.
kind of
I know, see? Everyone's like, whoa, whoa, whoa. Okay, so number one, your dad and your brother, did they have this as experience before? I know you said they were in the restaurant space, but this is an investment company is kind of huge. Did they do that beforehand?
They started out as restaurant franchisees in the Wendy's business. And that's kind of how they built their expertise. And then they started, sort of evolution, sort of evolved into doing more transactions where they would occasionally sort of help somebody out or casually kind of put some capital into their business and help them grow it. And then they formalized that company in about 2008 into Fresh Hospitality.
Okay, so let's actually break this down for people because I don't
Definitely.
think, especially newer entrepreneurs, I don't think they understand the investment side of this. So tell us brass tacks, like what you guys do and how you make money. So that way everybody's on the same page and they understand. Because you're
For
throwing around
sure.
numbers like 325 million. Everyone's like, oh, that's great. Okay, whatever. That's tuned out because they're not there yet. So give us
Yeah.
sort of the brass tacks.
So and we'll use restaurants as the
Perfect.
simplest example, I think. So basically our core business model in the restaurant segment, we invest in early stage restaurant brands, typically within the fast casual vertical. So if you're familiar with like, I guess everybody's probably familiar with Chipotle, Panera Bread. Those are sort of emblematic fast casual brands. And there's a kind of a headwind now with healthy fast casual concepts like Sweet Green and things like that. And that's, we sort of focus on the barbells of fast casual. So when I say that, I mean, we either focus on extremely healthy concepts or we focus on extremely indulgent concepts. So
Ooh.
um,
Because
within
you
our
can have both, right? Of course. Come on.
yeah, and the reality is what we found is the millennial consumer and sort of the trends that are happening right now. Consumers don't want to eat in the middle anymore, right? Nobody goes to like, sorry, but nobody goes to like Denny's or Applebee's anymore, right? Like if I'm gonna eat, like typically I want to eat healthy. If I'm not gonna eat healthy, like I don't want to go to McDonald's. I want to go to like someplace where I can get duck fat fries and like,
Yes.
biscuits and like all kinds of crazy stuff.
If you're gonna
Um,
do it, go big. Go big or go
exactly.
home. Okay.
So anyway, kind of backing up. So what we do typically, we invest very early stage, like so 1 to 5 units, and we leverage our infrastructure. So like I said, we have a number of other companies that we've created that do account. We have a company that just does accounting. We have a company that just does technology. We have a company that just does marketing. And so when we invest in a very early stage restaurant concept, we basically plug them into our accounting package, our technology package, et cetera, to help them scale up. And so
Okay.
our huge focus. Sorry, okay, sorry.
No. I was just
Got it.
okay. Okay. Question. I know you're a podcaster, so you're used to this. You're like, I will
I could
tell
just talk all day,
everything.
so you got to interrupt me.
Good. This is why video is important. I can raise my hand. So why invest in 1 to 5 units? Why not do the startup phase? Because you know the space extremely well. Why are you not the one creating it all?
Our mission is to help entrepreneurs grow, and I think it stems from trying to find and work with really passionate people that we think we can help them be successful. And we, like I said, we have about 15 concepts in our portfolio. Of that, we've created maybe 2 or 3 of them. So we have kind of done the startup
Okay.
piece of it. But typically, what we like to do is we like to find a concept that already has traction, right?
Mm-hmm.
It's already validated, has a great founder behind it. So we already have kind of somebody who's going to work the business day to day and be the operator. And really, what very is typical of the restaurant business is people struggle with the systems, processes, the scaling side of the business. Most restaurant founders are artists essentially, right? So think of them almost like a musician or a musical artist or a creative, and they want to focus on food. They want to build a cool interior. They want to care about the guests and the individual guest experience. What they hate doing is crunching the numbers and like doing their point of sale system and dealing with all of the technology on the back end. So we layer in all of that stuff and take care of what's called in the restaurant industry. There's sort of a term of art, the back of the house, as they call it. We take care of the back of the house and basically help them focus on what they're great at, which is the creative side of the business.
So why restaurants seem really volatile, right? Like out of every industry that you're going into, that seems like a crappy one. Why would you pick that? Just because you had experience in it before with your dad?
Yeah, so they definitely had a background in that space, but I think the question is, restaurants definitely have a reputation for being sort of a risky industry. Ironically, I think given sort of the changes that have happened with e-commerce, with the internet, with everything else, restaurants are turning out to be one of the most stable and predictable and undisruptible revenue streams that are out there, right? And I mean, there are companies that like Soylent and some others that are sort of investing on the rounds of fringes that maybe would change the fundamental structure of how people eat. But we make food investments too that, we're hoping to kind of ride some of those trends as well. So we recently invested in a vertical farming company that was founded by Elon Musk's brother. So we're trying to hedge our bets a little bit too. But getting back into kind of the brass tacks, like the numbers of it, It's all about returns on capital, right? And so we look at, and I can break down, what that means and how to think about that. But like, restaurants are considered volatile because they have low margins, right? An average restaurant, $1 in sales, you get 5 cents, five
Ugh,
cents to the bottom line, right? Which is
yeah,
very,
that's
yeah, very
rough.
low. But if you think of, one with the technological and process focus that we have, we're able to expand our margins and get them into the, low teens, even 20 high, or like 20% if in a high volume location. Um, but margins don't really matter that much as long as you can operate the business successfully. What matters are returns on capital, right? So if you're putting up, and I can give you some ballpark numbers from one of our concepts, we have a concept called Taziki's Mediterranean Cafe. We invested when they had 3 stores. We layered in all our systems and processes. Today they have about 65 locations, and we're hoping to have 80 open by the end of the year. So Taziki's, again, it changes and varies quite a bit, but let's just use some round numbers. An average Taziki's costs about $500,000 of capital to start up a single store, right? So for that $500,000, an average Taziki's does about $1.5 million in sales, right? And I mean, these numbers change and they vary by location, et cetera, but
Mhm.
we'll just use round numbers. So if we're looking at a 10% margin on that, that's basically $150,000, right? And so if you look at, or let's even just look at a 5% margin here. I'm going to bust out my calculator real quick.
Oh yeah, I love this.
If we look at a 5% margin on that, that's basically $75,000 a year in profits, right? As a 5%, which is the industry sort of average, we can do much better than that. If you invest $500,000, right? Hold
But
on.
you as the investment company don't get all the profit, do you?
Well, we don't, but we'll get into that in a second. But I'm just talking about like unit
Hmm.
level economics of
Mm,
why the restaurant business can be a
makes
compelling
sense.
business,
Okay.
right? So if my store if it cost me 500K to build it, I do 1.5 million in sales, right? And I make a 5% margin, which is the low end, right? That's 75K a year off of a 500K investment. That's 15% return on capital
Yeah.
annualized, right? So that's a pretty good return. Now, if you're looking at the stock market, right, the implied return of the stock market is like sub 6%, including dividends at this point.
Hmm.
So, 15% cash on cash returns are very compelling. Now, that's just unit level economics. Like the whole investment thing is different. But if you think about restaurants as a vertical, just because it's low margin, right? Grocery stores are also low margin, but you can have good returns on capital. It all just depends on how much you invest in the business.
Okay, that makes perfect sense. So, where did you guys get the money? So, when you started, most people can't go, I'm going to start an investment company. Oh, wait, you need a ton of capital usually beforehand. So, did you guys get investors? Did you start with your own cash? Like, how does that work?
So we did not raise a fund, which is what some people do. We basically syndicate our transactions on a deal by deal basis.
Wow.
And what that means is we have a network of friends and family that we work with that we raise capital for each individual transaction. But the reality is most of our deals are not super capital intensive. We actually focus on, even within the individual restaurants that we work on, like we try to get them profitable enough where they can essentially self-fund most of their own growth. And that's part of the reason we don't do a fund, is that it allows us to have a much more flexible time horizon for our investments. So we're not a typical investor where we look at, getting in for 3 to 7 years, flipping it, and then moving on. Like in many
Huh.
cases, we'll hold an investment or have the potential to hold an investment for much longer than that. And our structure enables us to be more flexible about doing that. But that also, again, restaurants can be a risky business. So we like to really focus on getting the business model right before we build any more stores. And that's why we don't want to be constrained by this sort of time horizon limitation. And I'll give you one quick example.
Sure.
We have a concept called Little Donkey, which is a Mexican burrito concept.
Okay. Uh-huh.
Um,
Cute.
and Little Donkey, we as actually atypical, it's actually a concept we created. We basically took a chef from one of our other concepts who really wanted to do something on his own. We helped him kind of spin that into a new business.
Wow.
And so Little Donkey, we opened the first location in the spring of 2012. And we did not open another store until late fall 2015. So, 3.5 years, basically, we didn't build another unit. All we did was focus on getting the unit level economics right and getting the business model right. From there, in the fall of 2015, we opened our second store. In the spring of 2016, we opened our third store,
Hmm.
and we've got 3 more stores that are already in some form of development. So if we had a fund, we would have had to aggressively build that business much more quickly, and we might have scaled it before it was ready to scale.
Hmm.
But given our current structure, we basically have the ability to scale it in a way where we can get it right and then grow it and not have the pressure of, oh my God, we got to, we'd be like, we were like 4 years into the thing, we'd have to sell it next year. When in reality, the real value creation of that business is probably going to happen in the next 3 to 5 years, where it goes from, 3 units to 20 units or whatever it might
That's
be.
just smart. That's the long game. Okay, so that's his perfect transition though to what the heck you did with that company to make it successful. So what are the core business system concepts that really make a huge difference that most people don't know? This is sort of your sweet spot. This is the back of the house. This is what you bring in. What are people in businesses in general doing horribly wrong, and slap them around and tell them what they should do better?
So, well, I think that those are actually two separate questions in my mind, which is, how like what is the importance of systems and processes, and then what could people do better, right? I think those aren't necessarily the same thing. Even if you could do better with systems and processes, it doesn't necessarily mean that you should be the one doing it, right? And
Oh
that's
yeah.
kind
Heck
of
yeah.
what our business is about. But I mean, from a system standpoint, as we said, restaurants are very low margin. Our focus is on really basically just the ABC fundamental blocking and tackling of operating a successful business. Measuring everything in the business, putting technology in place that lets us track things like inventory, things like food costs, things like labor hours, all that stuff. A lot of early stage restaurant businesses have none of this stuff in place. In many cases, they're even cash businesses where they don't have any sort of POS, any way to track their business, et cetera. So there's no like pull back the curtain. Here's the big secret. The secret is just ABC blocking and tackling and actually implementing systems and processes. And for somebody who's at if you're listening right now and you have a business with like very early stage, a couple employees, and you're banging your head against the wall with trying to figure out how to do systems and processes, and you probably mentioned this book before, but there's a great book called The E-Myth Revisited that basically teaches you how to do that stuff at a very simple level. But, I would say, like, when I think about it, there's two pieces of the puzzle that maybe people don't think about. The first is any single thing that I'm ever doing, basically, other than putting deals together, which is what I like to do and sort of my superpower, my specialty. Other than putting deals together, if I'm ever doing any sort of job, and I'll give you a specific example of this with a portfolio company in a second, my thought process going in, and the entire time, is basically I'm going to record and document every single task that I'm doing, because I want to get out of that job ASAP. I don't want a job. I don't want to be in the company. I don't want to be the CEO. I don't want to be the CFO. I want to document everything I'm doing and hire somebody smarter than me and better than me to do that job on a go forward basis. And so to contextualize that, we invested in a company called I Love Juice Bar about 2 years ago. And I Love Juice Bar, it's a juice bar, right? When we invested, they just opened their second location. Today, 2 years later, we invested June of 2014, so a little more than 2 years. They have 32 units open. They have another 25 units in some form of development. That transaction, I sourced that deal, I negotiated it, I closed the investment. When I did, I came on board the company as the chief financial officer, right? And so for the first 18 months of the business, actually a little less than that, I was the CFO. It was my job to raise capital. It was my job to do all the budgeting, all the financial planning, manage the cash of the business, et cetera. And so I basically documented every single thing that I was doing. I had all the pieces of the puzzle lined up. And from day one, my goal was I need to hire and find a chief financial officer that can replace me. And eventually, because I was constantly on the lookout for that, and I'd already defined everything, we found a candidate that I was able to replace myself. And then day one, I basically sent them like a Dropbox link, and I was like, here's like the 8 things you need to be doing. Here's like how I did them all. Feel free to improve on any of them. This is just a starting point.
So why didn't you search for the CFO before all this and get them in advance? Because finding the right people is tough. So we can definitely talk about that too. But why did you document and do everything first and then have everybody else?
I mean, honestly, it was just a function of the company was so early stage that we didn't have the payroll to support a CFO, and the fact that it takes time and energy to source high quality candidates. And so that was really, there's no big secret. That was just why I did it.
Ta-da.
Yeah.
So-
It wasn't that there was no master plan. It was like, all right, I'll be the CFO and we'll figure it out from
Matt's
there.
like, darn it. Okay, yep, that's me. All right. Well, so you're growing these things so quickly. Do you have to worry about finding the right people or churn, or like it seems like when you're like, oh, and we're going to do 25 more stores or whatever, that is so much work. Do you guys have the right people in order to do everything in advance just because you've been doing this for so long?
We definitely have relationships and networks of people, and the beauty of being kind of laser focused in a specific vertical, we have the ability to kind of cherry pick people that there might not be another opportunity for them in the business they're currently in, but they can move laterally into a new business and then kind of scale with that company. So that, for example, the juice bar I was just talking about, the chief operating officer, there was a woman in one of our businesses who had basically been sort of like an area manager for a number of different units, and she wanted to kind of take it to the next step. When we invested in Juice Bar, it was a great opportunity to bring her in, and she's an incredible operator. Bring her in as the chief operating officer, and she has been excelled at that job.
How do you know when they're the right person for the job? Like, how can you go, yes, this person's going to be awesome and put them in? Because I feel like there's so many hiring questions for people that I get all the time. So how do we know the right fit for the right person?
There's a couple pieces of the puzzle. I mean, I don't think anything beats actually having experience, right? So when in this context, like we'd worked with this person for years and years and years, so we knew that they were a proven commodity, and we could move them into something. We could move her into this opportunity, and that she'd be really successful. More broadly, I would say the biggest thing that people don't do if you don't have that insider knowledge of already working with someone is talk to people who do, right? It's so obvious. Nobody ever does reference checks. And there's an amazing book, you may have even mentioned it on here before, called the Who Method. We implemented the Who Method across all of our businesses like 3 years ago, and it's a game changer for sourcing people. And the one of the core components of the Who Method is you have to do at least 5 reference checks on any candidate, right? Because it's shockingly easy to discover the truth about somebody when you do a reference check. And part of the Who Method too is like you ask somebody, I'm going to talk to, like, you basically say like, who is your boss at this job? Okay, what was their name? What's their contact information? All right, when I call them tomorrow, what are they going to tell me about you? Right? And you get like, one, you get a lot better answers just doing that. But two, like if there's a huge disparity between what they said and what their previous boss says about them, huge red flag.
Yeah, I've been listed as a reference, and I'm like, they shouldn't have listed me as a reference. Like I'm honest, so no. It's kind of funny how that, but I love that book, and that's a really valid point. We were talking earlier, and you were saying your sweet spot is deals, and we were talking about like how you were on the debate team before we actually started recording. And so tell me a little bit about what you do for deals and how you figure out what's a good deal for you to invest in, because it sounds like that's such your sweet spot, and I feel like entrepreneurs aren't good at negotiation. There's just so many things we're not good at. So give us your wisdom.
Definitely. I mean, I think there's two big pieces of the puzzle, and one of them is like a super deep rabbit hole that we can scratch the surface of. And the other one I think is really, really simple. One is like, fundamentally, I'm obsessed with like, how can I be more high leverage, right? And so that applies to deal making in this micro context, but applies to my entire life. But I'm obsessed with like, how can I achieve more in the same amount of, with the same amount of time, resources, energy? Because the reality is like, Bill Gates has the same amount of time as anybody else, but with his time, he's creating a lot more value. He's creating a lot more results. And you can say that about anybody who's ultra successful. So it's not a question of working harder. It just isn't. Nobody wants to hear that, and they want to just. And I think if you don't have any other resources, like time and grinding is a resource. But the reality is like Bill Gates isn't making 10,000 times more than me or whatever, because he has 10,000 times, he's working 10,000 times harder. He's just doing something more high leverage. So I basically found two things that and I've thought about this and journaled about this for years, is like, what is high leverage? How can I be more high leverage? I basically found two things that I think are actually super high leverage. One, which you just talked about, is hiring people who are better than you. So we don't have to get into that one, and that doesn't apply to really making deals. The other one is mastering the ability to make better decisions. Ooh. Because understanding decision making cascades through every single thing in your life. If you fine tune and you hone your ability to make decisions to the point where you can understand a transaction, you can understand a negotiation, you can understand how people think and act, that's going to cascade through pretty much everything. It's one of the most high leverage things you can focus on. So when I'm thinking about like reading or improving or growing or whatever, like I really don't like to typically read tactical books about like how to generate 10,000 leads or whatever. Like what I want to do is understand the fundamental principles that govern reality so that every single decision I make about everything can be more effective. And that's a model that I pulled from one of the greatest investors of all time, Warren Buffett, and his business partner, Charlie Munger. And for people who aren't familiar with Charlie Munger, he's incredibly smart thinker. And I sort of started studying those guys from the investment standpoint and really got into the meat of what they were talking about, which was the idea. And, again, this is the super deep rabbit hole, but like the idea of mental models and worldly wisdom and all these topics. And that's actually how I also sort of accidentally stumbled into being a podcaster.
That's what I was going to say. I want to listen to your podcast now. This is so interesting.
That's what my podcast talks about, is like how to make better decisions. And this like there's a lot of psychology behind that. But without going, and we can definitely go down that rabbit hole and go deeper there, but without going super deep into that, the other piece of making deals, which I think most people overlook or don't understand, is that deal making is not about like tricking somebody into, oh man, I got them to agree to like this thing. Like deal making, I think the simplest way to conceive of it, in my perspective, is look at a Venn diagram of your interests and their interests, and whatever the overlap is, that's like the room for making a deal. So if there is overlap and mutual interest, then it's possible to structure a transaction. If there's just not enough overlap, a deal's never going to get made. I don't care how hard you like try to close them or how aggressive you are, or if you try to like manipulate people, whatever. If there's not economic interest, then it's going to be really, really hard to make a transaction. So my negotiating style is fundamentally just from a place of understanding. Like all I do is seek to understand. I want to understand what they need, what they want, why they want to do it, what they're looking for. And then I try to basically craft something out of that that's a win-win for everybody.
So you do really focus on the win-win side. So it's not as though you're just getting really good at, because this is where the whole skeezy used car salesman comes along. They're trying to sell you something you don't actually want. That's why they're skeezy, instead of trying to, like you said, find the overlap and make it work. Are you ever like, when you've done a deal, have you ever gone, oh, that wasn't a very good one, or oh, that one?
Oh, definitely.
Okay.
Yeah, I mean, we've had deals that have blown up, deals that have failed. I mean, I think that's an inevitable part of structuring transactions. Like you're going to have deals that blow up. And we use a really, really simple grid basically to conceptualize this concept that we just call it good deal, bad deal. And it's basically you have like, you have partner on the top and it's good partner, bad partner. And then you have deal on the other side. It's good deal, bad deal. So you have 4 quadrants, right? Good deal, good partner. We call that making money and having fun, right? Good deal, bad partner always ends in either a sale or a premature exit of the business. Bad deal, good partner, you find a way to work it out. Bad deal, bad partner, get out as soon as possible.
How do you know if they're a bad partner, though, before you start working with them?
I mean, like I said, you want to do reference checks. Like the number one way that I do due diligence on an investment opportunity, other than, I mean, I think obviously, in the restaurant context or whatever, like I want to go eat the food, I want to explore the concept, I want to think about how it's positioned in the market. That stuff is all sort of a prerequisite. The real work is I want to talk to as many people in my network or people that aren't in my network that are smart about this deal and be like, okay, well, what do you think about this person? Right? Like, well, what have you heard about them? Like, what do you think about their brand? What do you think about their food? And so, the first thing I'll do is if somebody, and we fortunately have a huge actually inbound pipeline of investment opportunities. But the first thing I'll do when somebody pitches me an investment is I'll go ask like 3 or 4 people that I think might know about them and be like, well, what do you think about this? And if they're and I had a deal recently where someone was like email me really aggressively, like, oh, like blah, 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 like, blah, blah, like sending me all these emails. And it was kind of like tipping a red flag in my mind. I was like, if this is how they're going to behave, like, I'm not sure that they're the right partner. And so, but I was like, you know what? I'm not going to just write them off. Like maybe they're just a hustler and they're really aggressive. So I contacted, being the food business, I'm friends with a lot of food bloggers, food writers and stuff like that. And I contacted a couple people and I was basically like, hey, what do you think of this person? And everybody was like, run in the other direction. Do not do business with them. And so I didn't even go eat at their restaurant because check. I don't need to, right? Like,
yeah.
But it's the same sort of fundamental principle from the Who method, which is like, talk to people that have done business or have worked with this person, because that's how you're going to get real information about how they actually are.
So what if it's not yay or nay though? Because it's way easy for asking three people and everyone going run. You're like, okay, great. It's all figured out, right? But what if it's this gray area where they're like, well, they're kind of here and they're kind of there, and that's where I feel like people get tripped up. Like everything seems gray, and then they can't make a decision.
I think that's typically a nay, right? Like if it's gray, why are you doing it? Just like if it's a marginal decision, I'd rather just focus on my existing opportunities and not even mess around with it.
Because
Like
normally you'll know if it's a yay, and you start going down that path, and you're like, oh, okay, great, all signs align.
if it's a yay, I mean, it's like I don't even want to use the phrase, but it's like super cliche that like, people are just like, it's either a hell yes or a no. Like I don't like that whole shtick,
Yeah.
but the reality is like for me, it's an obvious opportunity or I'm not going to do it.
Mm.
And so, then the problem is if you have too many that are just like home runs, like cherry picking those, that's when it gets really challenging.
Oh, too many
That's
good deals. Oh,
That's a good problem to have though. But I mean,
people are like, you suck, Matt. Thanks. No.
if it's a marginal opportunity though, just don't do it. Like
Yeah.
just focus on what else you're doing or find other opportunities.
Okay, that makes perfect sense. And we never actually said the name of your podcast, so I want to make sure I tell everybody to go listen to it. Science of
Yes.
Success. Go tell them where they can find out more about that, because I want to listen to it now too.
Absolutely. Yeah. So my podcast is called The Science of Success. And we touched briefly on how I kind of got in there, but you can listen to it if you just go to scienceofsuccess.co. That's scienceofsuccess.co. Or if you just search Science of Success on iTunes, it'll come up. So either one of those is the easiest way to find it.
So decision making, I think, is a huge piece, and I don't think entrepreneurs understand how big of a piece it is. Like yesterday, I did back-to-back meetings and calls, and I was like, I can't make any more decisions. Like my brain is so no more. Like please don't ask me a question. It will not get a right answer. So, but one of the things that I found, especially with high level business owners, is that they are amazing at making fast decisions and going yay or nay. So how can we get better at that besides listening to your podcast? But give us like references or a couple tips on how, as a business owner in the moment, we can make better decisions.
Definitely. So to be a better decision maker, there's no like get rich quick strategy. The reason that high level gray hair, like business grizzled veterans are able to make, instantaneous decisions that are usually correct is because they have, decades of experience in making those kinds of decisions. Mm-hmm. So what you need to do to be able to sort of short circuit that, or the strength that they fundamentally have is that at a subconscious level, they've mastered all of the different components that already go into that decision. And so they might not consciously be able to immediately give all the justifications, but their subconscious mind is processing through a bunch of information and then they're snap making that decision, right? So what you want to do is basically feed your subconscious as Charlie Munger, who's Warren Buffett's business partner, calls them, feed your subconscious mental models, right? That's the term that he uses. And mental models are basically tools that you use to understand reality. And it's not super complicated. Like the simplest way Charlie Munger, and I'll give you a couple of resources to do some homework on this, but the simplest way Charlie Munger describes mental models is it's kind of like if you went to like the 101 course of all the major disciplines that govern reality. So chemistry, biology, physics, economics, mathematics. You just went to like 101 and took like the 10 biggest ideas from each of those, right? Just understanding those concepts will give you 90% of the mental models you need to understand reality. One of the biggest is psychology, right? Psychology rules all human interactions. And psychology is rooted in biology and the evolutionary structure of the brain and all of this other stuff. And if you want to sort of take the first steps on that journey to just even really understanding the conceptual framework of using mental models to improve your decision making, there's two things I would recommend to get started. One is there's a YouTube video that's about it's like an hour and 15-minute speech by Charlie Munger. It's called The Psychology of Human Misjudgment. And he goes through, I think it's the 27 standard causes of human misjudgment, which are basically 27 mental models of psychological biases that cause people to make bad decisions. And every single person falls prey to all these biases at different points in their life. I fall prey to them. You fall prey to them. Every single person listening to this has definitely fallen prey to these biases.
No, I'm perfect, Matt. Don't tell me that. Now I need to listen to it.
The second place I would recommend starting is a book called Poor Charlie's Almanac. And that's a book, it's not by Charlie Munger, but it's about his life. And it goes through sort of his biography and then the whole framework of mental models that he uses to describe reality, and then goes into there's a bunch of his speeches that are transcribed, and you can kind of get into the weeds. If psychology is the bent that you want to take and dig deeper on, there's also two books that I'd recommend. One is sort of the legendary psychology book Influence by Robert Cialdini, which you may have talked about on here before. But if you want to understand how people can make ridiculous and irrational decisions, definitely read that book. We also did a brief, like 6-part series on my podcast called Weapons of Influence, where we broke down the 6 biggest tendencies that he talks about in that book. And then the other one would be a book called Predictably Irrational by Dan Eyerly. And that's almost like, I would say, like the Freakonomics of psychology. So it's like very fun read. Like, even if you don't want to do like the heavy lifting of like getting into like some psych research and really understanding it, it just tells these insane stories about how like rational, logical people make ridiculous choices in the right context.
Okay, I have been told about that book so many times, and I haven't actually set it aside to read it. So I really appreciate. I'm gonna go get the Audible version of it soon. That's killer.
I have one other.
Oh yeah, I love this. You're like, yeah.
This is like the master class. Like I would say, don't even think about reading this book unless you've read all the books I just talked about. It's a book called Seeking Wisdom.
Ooh.
This is the book right here. And it basically, like, I'm just going to show you, like, this is just the intro. Like, these are the notes.
Your notes.
These are my notes on this book, right? Like, I mean, it's seriously, I'm not even exaggerating. It's the most information dense book that I've ever read in my life. And it's basically about all of, I mean, it goes through both the biology of sort of human decision making. It goes through the psychology of it, goes much deeper than, and the Charlie Munger speech is kind of like an intro to what they dig into. And then they get into what they call the physics and mathematics of misjudgment, which is like all of these, systems thinking and statistical analysis. And like, and it's like, I've read it like 2 or 3 times and I still I'm just getting like really scratching the surface of what it's actually about. Like I actually started a mastermind with a buddy of mine where we're going through like 1 chapter every 2 weeks of this book and just like getting that deep on it.
That is amazing. We're going to have a master's degree in decision making after reading all of these books.
Yeah, seriously. So like I said, it's a lifelong path to mastering decision making, but it pays enormous dividends through everything that you do.
Gosh, this is so amazing. I know we have to start wrapping this up really soon, but I'm like, I have horrible handwriting, but I've written a ridiculous amount, which I really appreciate, especially with the resources. So that way, A, listen to your podcast first, B, go through all the things that you suggested. And everybody that's listening, we're definitely going to have lists of this. So don't worry if you're driving and you could not write these down. We will have all of the links in the show notes. So I'm going to ask the last question, Matt, but again, I need to like go to Nashville and actually hang out with you guys and
come visit.
Yeah, seriously, I have so many friends in Nashville and we should totally do another podcast together. But the last question is, what's one action listeners can take, just one, this week to help move them forward towards their goal of 1 million?
I mean, I would say listen to that Charlie Munger YouTube interview. That to me is the simplest thing you can do. If you want more of like, I'll give like another tiny little action. Like if you want another one, I would say journaling is an amazing tool. Like Tim Ferriss and Josh Waitzkin recommend this idea. Basically, at the end of the day, pose a question to yourself. And there's a ton of neuroscience about why this works, but like pose a question to yourself. And then the next morning, before you check your email, before you do anything, journal about that question. So pose the question like, how can I get to my next million, or how can I get to my first million, or whatever? And then go to sleep, wake up the next morning, and then journal about that. Your subconscious will process, and then do that every day for a week. Your subconscious will process that information and start to come up with combinations and ideas that you consciously weren't able to do.
So I used to do that and totally forgot and dropped the ball on that. So whenever I have like especially a big decision or something that's coming up, it's hard to conceptualize and just think about it all the time, or I'll meditate and think about it. I used to do this and I'm writing that down. Another thing to write down from you, Matt. Thank you so much for coming on the show today. Where can we find out more about you? Say the link to your podcast again so everyone can follow up.
Definitely. So scienceofsuccess.co, that's scienceofsuccess.co. You can get everything there. We have a bunch of podcasts that talk about all kinds of things that I talked about today: influence, decision-making, mental models. We've got some amazing interviews on mental models. So if you want to learn more, the podcast is a great resource to do all of that.
Awesome. Thank you so much for coming on the show today, Matt. Really appreciate it.
It was an honor to be here. Thank you so much for having me.
I hope you enjoyed that interview. And if you want more like it, go to eventualmillionaire.com. If you click on the millionaire case studies, you will see over 200 millionaire interviews. I don't want you to get overwhelmed, of course, but I do want you to pick the one that might make the biggest difference in your business today. So what's something you're struggling with, and take a look and see if one of those could specifically help you. Don't just take information for information's sake. I want you to be able to take the information, have it applicable to you right now. You use it, you take action, you see results, you come back and go, Jamie, that was amazing. That's what I want. So go check out eventualmillionaire.com and click on the millionaire case studies. Thanks.